Hello my friends, Jeff, Tax Rescue CPA. I've been helping people with taxing issues for over 25 years. And today I'd like to talk to you about how you should set up your new business. Maybe an LLC would be the right choice for you. Well, let's talk about this. When you're at the beginning point of starting a new business, choosing the business structure is critical because this is going to determine several things. One of it's going to determine legal liability issues. It's also going to determine the complexity you're going to have to deal with in managing and operating the business. And lastly, and the important thing on my side of things is the taxation. How is this business income going to be taxed? This is why it's critical. And as a single person, now if you're going to start a partnership, that's a different discussion. So today we're going to talk about what to do under the assumption that you're starting this business by yourself or with your spouse. So you have basically three choices, and here they are. You can be a sole proprietor, you can be a corporation, or you can be an LLC, which is really kind of a mix. It really gives you a lot of options, but let's talk about that. So before we jump into LLCs, why would you want to choose a sole proprietor or a corporation? There are very good reasons to choose those structures also. But the point on the sole proprietor is that this business structure is going to work a lot better when you are anticipating this business to continue to be kind of a small, even like a side business or like a gig kind of a deal where it's not your main source of income. It's just a side deal. It's more than a hobby, but this isn't your main occupation. On the other side, a corporation has a lot of advantages. When you know this is going to get larger, there's a potential for more people to be involved. You take on other shareholders, or maybe you're buying a business, and because of the structure of the business you're buying, it necessitates a corporation. Very good reasons. But again, today we're going to focus on LLCs and what the advantages are and why you should choose an LLC. The main thing about an LLC is that it has flexibility. It's really a hybrid of these other structures and can kind of move from one to the other and provide you growth opportunities in the future to grow with you and your business. So let's jump in. I have the top 4 reasons why you should choose an LLC for your new business. Number 4 is professional credibility. Having LLC after your name is gonna give your business credibility with your clients and customers. It signals that you're a legitimate business and that you're established rather than, something less than that. So a credibility will come from that LLC after your name, after your business name. Okay, number 3 is there's much easier compliance with an LLC and fewer formalities when compared with a corporation. So you've got no board meetings, you don't have strict record keeping rules, keeping minutes and these kind of things. So it makes the business a lot simpler to run while still offering you legal protection because of the LLC. It's a limited liability company. That's what LLC stands for. So there's legal protection. Let's talk about that. That's number 2. So number 2 is the liability protection. An LLC separates your business activity from your personal assets. So if your business is ever sued or it incurs debt, there are ways to keep your personal assets, your home, your car, your savings, these kinds of things separate from the legal proceedings that could place them in jeopardy if they were part of the business. This would be in a sole proprietor structure. So that's number 2. The number 1 reason, and what I really want to explain and get a handle on, is the taxation and how LLCs are taxed. But by default, when you start a single member LLC, it's treated and taxed as a sole proprietor. It's considered what's called a disregarded entity. So it's disregarded as a separate entity and it's part of you. You still have the legal protection, but it's taxed and reported just like a sole proprietorship. This gets reported on your Schedule C of Form 1040. So this gives you really simple tax reporting. but it doesn't give you the most advantageous tax treatment. So this is where the option comes in, and this is where it's especially important if you're starting out and you expect this business to grow, and this is your main source of income, and you anticipate an upward trend on the growth of this. Because what you can do later is you can elect to be treated as an S-Corp. Now, by being treated as an S-Corp, there's a lot of advantages tax-wise to that. And you do that simply, let me go back a second. In order to make that election, to be treated as an S-Corp, you would file IRS Form 2553 saying, hey, I'm an LLC, I want to be an S-Corp, okay? That's all basically what it is. There's some restrictions on the timing of this and whatever, but those are details we're not going to dive into now. So, okay, Jeff, tax savings, what are you talking about? Well, here's what happens. When your income as an LLC flows through as a disregarded entity and it shows up on Schedule C of your 1040, it is all subject to self-employment tax. All of it is subject to this tax. The self-employment tax, Social Security, Medicare, both halves is 15.3%. So every dollar that flows through as income is going to land as subject to self-employment tax. But when you change your structure to an S-Corp, then you can take a reasonable salary. This is where you can pay yourself, you have to pay yourself through payroll, taking a reasonable salary, and then the rest of the income you take as a distribution. Okay, well that's fun, Jeff. Same amount of money, right? Yeah, but the payroll that you take, the wages, they're subject to Social Security and Medicare tax, essentially self-employment tax, but the distributions aren't. So you take some of the income as a salary subject to self-employment and some of it as a distribution, which is not. So every dollar you take as the distribution is going to save you about 15 cents in taxes because it's not subject to self-employment. Now there's some downsides to this structure compared, to making that S election and moving from the disregarded entity and the sole proprietorship, because as I mentioned, you're going to have to run payroll. If you're not running payroll already, that's some new costs for you and some new, formalities and administrative tasks. Then you're going to have to keep a much better set of books. When you report as an S-Corp, the reporting is more complicated, and this income gets reported on Form 1120S, corporate return, S-Corp return. So that's number 3, is you end up with having to do another tax return. So all of these things, the payroll, doing the books and accounting, and the corporate tax return are going to cost money. There's fees involved in this, or if you're going to do it yourself, there's more work. So you have to ask yourself, well, how much tax am I going to save in order to, allow for these administratives, to make it worthwhile for these administrative costs? Because I'm gonna have to save more than I have in cost, right? I mean, this makes sense to me. So you're gonna have to establish the business and get to the point where you're making enough money where it makes sense to set this up as an S-Corp. And usually this happens around $50,000 or $60,000 worth of net income. When you get to that point, it's usually time to start thinking about converting to an S-Corp. Okay, let's go back to this LLC selection. So we've gone through our 4 big reasons, okay? Credibility, legal protection, fewer formalities and administrative headaches, and the ability later to change your taxation, to change how you're taxed in order to take advantage of going around some of the self-employment tax on your income. Now, what about some warnings for you? If you made it this far in the video, I know you're committed to doing this and you want to know everything you can about your options, and this is the potential downside. So there are, let's say most states have an annual fee, some sort of cost to maintaining an LLC. So when you set up an LLC, this happens at the state level. You're going to file or create the LLC with the Secretary of State in your state. And by doing that, that's going to trigger ongoing reporting and potentially ongoing fees. So most states have this kind of fee. So some of the higher cost states are California, New York, Nevada, Massachusetts. Now there are some states, there's about a half a dozen or so that don't have any fees. For example, Ohio, South Carolina, you're golden. There's not going to be any kind of annual fees or costs involved simply by having an LLC. So be sure to check with your state as to what the fees are going to be. And this is also a timing issue. Make sure that you don't set up the LLC until you're good and ready, so to speak. You don't want to set up the LLC, for example, maybe in the middle of December and incur a year worth of annual fee when you really don't plan on kicking off the business until January or February of the next year. Wait in order to get to that next calendar year to avoid some fees. This is especially true in California because of their fee structure. Not the point of this video. I've got other videos out there about how to set up your LLC and what steps you need to go through. This video is about why you want to choose an LLC and what the trade-offs are. This is not an easy question. This is a case-by-case basis. I would love to be able to sit here and say, hey, everybody, set up an LLC. But that's not good advice. If somebody's telling you that, hey, no matter what you're doing, you should set up an LLC, you might want to give that a second think, because there are a lot of situations where an LLC is not going to be best for you. So it is, on the other hand, best or a good choice for a lot of businesses. It should be considered, not discount. And this is really a situation where consult with your CPA. Talk to him or her and figure out what the best structure is for your particular situation. And then while you're doing that, talk about the tax consequences, because this is really the big deal, is how you're going to pay taxes on this income, how it's going to flow through to your personal return, and how it's going to affect your personal bottom line. I hope this helps you today. Get some information and get you thinking before you make a move. Who's saving you taxes?